Houston Real Estate Radio with Shannon Register on the 950.
Welcome back. I'm Shannon Register.
I'm James Brown.
We are working on a coast-to-coast update today, and James and I are talking with Gene Nothup. He is Skyping in from Las Vegas to give us a real estate update. Welcome to the show.
Well, I'm glad to be here.
Gene, tell us what's trending in the Vegas market right now.
Well, it's been a very interesting ride we've had here in Las Vegas. Currently, we're selling stuff as fast as we can get it on the market. We don't have enough inventory. There's a shortage, multiple offers, that type of scenario.
Great. Wow. How bad did it get before, and how long did it take to get to where you are now?
Well, see, our market started trending down sooner than anyone else. We started in August of 2005. And although we didn't know it in August of 2005, we didn't realize we had a problem till mid-06 because we were running so hard. But as you go back now and look at the data, it started to trend off then. 2008 was our worst year. We had 32,000 properties on the market. A good, healthy, normal inventory for us is 12 to 14,000. That's about 110 days worth of inventory. And for the last 18 months, we've been less than 4,000 homes.
Wow. So what absorbed all that inventory? What changed?
What changed was pricing dropped, fell through the floor. I mean, we 60 and 70% off. The investors came in hordes and bought.
Are these foreign investors or US
a little
investors?
bit of everything.
Okay.
A little bit of everything. We had some Canadian money come in. We had some Chinese money come in. But a lot of U.S. money, a lot of money came out of the stock market and came into Las Vegas real estate.
As far as parts of Las Vegas, what's the best bargain neighborhoods in Las Vegas right now for investors?
Well, there's multiple segments. We have many neighborhoods in Henderson and North Las Vegas where a 3-bedroom, 2-bath home is $80,000, and they return $1,200 a month in rent.
So does the rental market really good there right now?
The rental market's really strong, but it's because we've had so many foreclosures. We're over 100,000 foreclosures.
Wow.
All of those people can't buy homes.
Right.
They have to rent.
Mm-hmm.
So our new tenant, our new market, are people that lost their homes.
Yeah, that's
so the investors are coming in, buying those homes, and then leasing them back to these people.
Mm-hmm. Mm-hmm. So when you talk about segments, I know you specialize in the luxury market. How's that segment doing right now?
Well, the upper end's doing really well. The values are unbelievable. Homes that used to be in the 5 million range are now in the 2. And we're seeing, because of Prop 30 out of California, because of the tax hike and the income tax hike in California, we're seeing a huge tax migration out of California into Las Vegas. The upper tier, they're coming in, they're buying homes, and they're moving here. They're moving their businesses.
And these are cash buyers?
They're cash buyers, yeah.
Cash buyers. Wow, that's good. That's great. So I know last time I was in Vegas, we could still see high rises that were vacant and not moving. What's going on with those with the large complexes that were having so many problems? Have they been absorbed by the market?
Not completely. In 2006, I did a study for a bank, and we had 6,000 unsold bank-owned or bank-controlled condos on the Strip. Mm-hmm. Now, the good news and the bad news was there are 6,000 people in the world that want a high-rise condo on the Strip. Problem is the absorption time. And at that point, I told them it would take 5 years to absorb it. We still haven't gone through it all. We still have about 1,800 bank-owned or bank-controlled condos on the Strip. We just completed a very large bulk sale on the Strip. So there are investors coming in buying large quantity. Mm-hmm.
So when you talk about the rise in sales that you have right now, this is all resale, or is there any new construction going on?
Well, it's been interesting. In the lower end, in single-family residence, the new construction has learned to compete with the foreclosures and the short sales. And we have new homes being built at values that compete with those because they have to. So it's a very interesting turn that's occurred.
So are these smaller houses that are new?
Yeah.
And yeah, okay.
This is stuff they can build for $120 a foot and sell it.
But
And
not
that's
cheaply
what we're seeing.
constructed, just smaller and smaller rooms or less,
Well, they're
less
smaller
upgrades.
homes. They're 12 to 18,000, 12 to 1,800, excuse me.
Square feet. Okay.
I'm used to the wrong market. 12 to 1,800 square feet, and they sell in that $150,000 to $200,000 range, and they're selling. I mean, there's buyers buying them.
When did your real turnaround happen? Because I think the national news is a little bit behind. When we listen to the national news, I just don't think it reflects accurately that your market has taken such a full circle. When did you really start to be able to evaluate it and see this change happening?
Well, in 2010, we started running because we had all these investors coming in, buying up this inventory. And we've been running hard since then. It's been a couple years, and they don't reflect what's really going on. They don't reflect the fact that there's only a third of the inventory we really need in Vegas. It's very interesting how they just ignore it.
When local homeowners there put their homes on the market, how long are they? I mean, are they getting scooped up right away? How long are they on the market?
If they're priced right, they're on the market just a few days.
Wow.
Mm-hmm.
Just a few days.
That's really good.
Gene, are there any other parts of Nevada that are bargain priced for investors right now?
Well, I know the southern Nevada market well, and there's value across the board. I mean, there's value there. You might have to dig a little bit. You might have to search a little bit, but there's value there for less than the cost of construction.
Yeah.
I just picked up a building, a 26-unit condo building in Henderson that cost $18 million to build, and when I get done selling it for the bank, we'll end up returning about $6 million to the bank. So for 30 cents on the dollar of the cost of construction,
wow,
I can put you in a brand new condo.
Wow.
Bargains.
Yeah.
Wow,
yeah.
that's ridiculous. Wow.
How long do you foresee this trend continuing?
Well, we're starting to see it end. Because of the lack of inventory, we're starting to see prices in certain neighborhoods start to rise. There's competition for homes, and we're seeing that now. So we're at the tail end of it. I tell clients the wave of foreclosures has already washed through Las Vegas.
Yeah.
And that wave is diminishing.
That's definitely the case here in Houston as well.
Okay.
Well, that's good to know because we definitely, want to, and there's a lot of investors out there still that want to get in, and we're waiting, to see what happened with this last election, and it's good to know that they still have time to get in.
Yeah, they do. They do. I'm telling clients you need to get bought in the next 6 months. That's my concern.
What do you think? Have there been any safeguards put in place to keep the whole bubble from happening again? I mean, you're talking about prices starting to rise because of the demand and a lack of inventory. Do you think that there have been changes made that are going to prevent those, the crisis from happening again?
Well, the biggest challenge we have today is we just don't have reasonable financing. Our market would be recovering a lot quicker and a lot stronger if we had financing. The banks are not lending. They're nitpicking the loans.
Right.
It's very difficult. If you're above a jumbo, here in Nevada, jumbo's $417,000 or more.
Yeah, same here.
You can't get a loan. They'll nitpick the file to death before they'll give that loan up. So that's a challenge, and that's keeping that middle ground, that $500,000 to $1.5 million, that move-up buyer is keeping them down. Traditionally, over the history of Las Vegas, about 12% of our transactions are cash. Last year, 47% of our transactions were cash.
Wow.
Nearly half.
Well, and the great thing about cash is you don't have to worry about those appraisals. Are y'all having any appraisal issues now?
Yes, we continue to struggle with appraisal issues. Buyers and sellers are coming to terms, but the appraisers just can't catch up. They just can't get there.
Yeah, we see that. We see that in our area as well. Different pockets have different issues with appraisals as well. So, what do you expect in the new year? I mean, it sounds like things are going great, but you said you foresee the slowdown as the inventory runs down. What do you predict for 2013 for Vegas?
Well, we've had a couple changes here. we had a law enacted in 2011 called AB 284, and basically that stayed our foreclosures, slowed them down. They made the banks perform. They made the banks have their paperwork together. That law has been slackened now, relaxed, so that they can continue to move forward and bring some more inventory online. There is some shadow inventory, not a tremendous amount, but there is some shadow inventory. Mm-hmm. We see that coming online. We see the investors and the buyers coming in and buying that. But we're seeing more equity sales. We're seeing more buyers and sellers do business. We're very optimistic.
That's
2013.
Good. That's good. Yeah. That's good to hear. All right. Well, thanks, Gene, for joining us from Las Vegas. We appreciate the update. And that concludes our Coast to Coast update for today. I'm Shannon Register.
I'm James Brown.
And you're listening to Houston Real Estate Radio. We'll be right back after a word from our sponsors.